ultimately the fundamentals of treasury are the same. It's just your application of it in different aspects of the business. The difficulty most organizations have around a very simple but very important aspect called cash flow forecasting. I think unfortunately the definition of treasury is sometimes lost in a lot of misconceptions. I'm the VP of Treasury for PayU. We're a global financial service provider in payments and credit, as well as investment in the fintech community. And so my responsibilities are to essentially manage all things treasury, which in a fintech is quite a substantial and diverse task. And certainly I think comparing it to my life before PayU, which was more traditional corporate, it's pretty amazing the ability for Treasury to really add deep value to the organization because of the inherent capabilities and the fundamentals of what Treasury is, especially for a payments company. Essentially what we do is provide Treasury products and services in one way or another, and so yeah, that's what we do, and it's super exciting. We always kind of push the boundaries and see how we can progress the function in the organization, both from a narrow definition of the term to also include the wider possibilities and opportunities within financial operations and settlements, and actually influence kind of product creation as well, and be close to the customer.
Yeah, I remember the day we were speaking, you mentioned that there's a traditional treasury when you are a fintech payments company, and then when you're a fintech company, there's a different angle of treasury.
Yeah.
How do you see the difference between the traditional treasurers and now the future of things that are happening in the fintech space?
Yeah.
Now that we're here in Money 2020.
Yeah, no, it's a good question, and I think ultimately the fundamentals of treasury are the same. It's just your application of it in different aspects of the business. And a typical corporate has those same functions, but the source of and the function of treasury in that context is different, where you are managing the same functions, but you're doing it in a much narrower definition of the opportunity. And so in a fintech company, especially a payments company, where the heart and soul of the business is financial messaging and technology services, but essentially comes down to simple things like payments, settlements, reconciliation. You can kind of wrap that up into accounts payable, accounts receivable in traditional corporate, and generally working capital management, cash flow management that extends to kind of liquidity management, and then risk management, providing FX solutions to merchants. Same thing you do on the corporate side, you're doing FX transactions for the corporate. You just have two orientations of money really. One is your own funds and the other is client monies, right? And so, but the concept of producing products and services for the benefit of your customers in the context of treasury services, treasury as a service is essentially what you're doing on the product side, and you're trying to do the same thing in a corporate context naturally in any event.
And one of the things I noticed in the treasury space is that not a lot of people know what a treasurer is. Some founders even act as treasurers, and then you have financial controllers acting as treasurers as well. And there's these words between like treasury operations, payment operations, financial operations. If you can just tell to the world, what is treasury operations? Do you think that's part of payment operations? What is the language we should be using? And how can we make all of these founders realize that they are acting as a treasurer?
Yeah, I think unfortunately the definition of treasury is sometimes lost in a lot of misconceptions. You either think of it as the treasury of a country and a government, or as non-profit, just someone kind of managing the money. Or what happens for the most part is the very simple definition of a back office function that's kind of somewhere between finance and accounting. No one really knows, which is highly unfortunate because I think we spoke about this the other day as well. Effectively, all of us manage our own treasuries. You pick up your phone and open your banking app. You're doing your own working capital management and funding. When you travel abroad, you think yourself about FX risk management and exchanging currencies, right? And so if you take that same notion from a personal perspective and translate it into a company, you start to understand it a little bit better. And essentially what your treasury does is we manage the cash and liquidity, the risk and the governance that sits around that, and preserving essentially the capital of the organization. But depending on what the nature is of the company, those 3, 4, 5 categories, including the bank relationships that underpin that, take a different shade. And so in a fintech, it's way more orientated towards cash and liquidity management, some parts of FX for sure, but you're managing a lot of cash, right? And that's where the opportunities come. And then the bank relationships that underpin that, and bank connectivity as a service, which is, you attend conferences like these, and it's a huge selling point. Software providers to say we can connect you to the world, right? And it's a little bit, I wouldn't say myth, but the reality of doing cross-border payments, for example, is not a simple thing. It's to a certain extent still what is the holy grail of fintech, and I think everyone's still chasing for it. And we're getting there, but the point is Treasury underpins that, Treasury defines that, and it is the fundamentals of Treasury that enable that, and that's what makes Treasury exciting, I think, in principle, but especially so within fintech.
I think that's also what you were calling it, the invisible treasurer, right?
Yeah.
Or the embedded treasury, which is, hey, every day in our lives we're paying bills like Netflix,
Correct.
AP. We want to make sure we get paid our salaries. It goes to the right bank account. Then when you travel, like you say, I need to convert so I can, use the best effects I can.
Yeah.
But this just gets way harder when you have multiple legal entities, currencies.
Yep.
It just gets really chaotic.
Yeah.
What are the 3 trends do you see, or things that you think will happen now in the treasury space that get you really excited about?
Yeah, so I think first of all, it's very much around technology to enable both from a startup all the way through to corporates to manage their treasury more effectively. Because the treasury function at scale is a specialist function. It's not, a job that you can just wake up one morning and say, I'm going to do this. Although all of us, as we said, kind of, when you talk about embedded treasury, do it in our personal capacities too. But you do want to move towards a place where that aspect of treasury within your organization, especially I would say for smaller organizations, is kind of this, as you referred to, we spoke the other day, invisible treasurer that is enabled by technology to manage a lot of things. And I think with today's technology, that is increasingly, a huge opportunity for the function to be executed more efficiently and effectively, but also ultimately the risk within the organization to be managed more effectively and really to add value to customers. And then, of course, I think adding on to the technology from an infrastructure perspective, you've got, it's obviously very much a buzzword at the moment, but artificial intelligence. But the point around that is the data that gets accumulated in companies, and the difficulty most organizations have around a very simple but very important aspect called cash flow forecasting. We spoke about that from a startup perspective. If you want to forecast as a founder, the only thing you want to know is what is my bank balance going to be, right? You're not going to look at some accounting forecast that's going to be theoretical. And so doing cash flow forecasting at that level of detail at a bank account level is typically quite difficult. But if you've got a good data pool and a smart enough technology to help you predict that and get smarter as it goes along, I think that'll be really powerful. And then honestly, I do think that there's a growing trend of understanding in the world of finance and fintech about what treasury is. And there's a couple of companies that actually define that already within their product suite. And so I think there's a little bit of a momentum, and we're at a bit of a cusp of redefining treasury within the finance and fintech landscape that could really add a lot of more value to what's already being done and kind of take it to the next level.
Amazing. And then for the last question is, we've discussed this before, right? You have this very specialized function that you gain by experience by being a treasurer across the world, and then you have the financial controllers acting as treasurers, and then you have the startup founders where they don't know, but they should definitely try to understand their cash position at the bank level rather than the accounting level, right?
Yeah.
So what would be the piece of advice that you will give to the treasury function that are very specialized to the rest of us human mortals that are trying to understand the treasury space?
Yeah, so I think there it's about understanding exactly what needs to be done, right? So whether you're a CFO or a controller or a founder, take the fundamentals of what treasury is against the problem you're trying to solve and slot it into those different buckets. And then you'll be able to define, right, what kind of treasurer or treasury resource do I need that fulfills that requirements, and what system you'll need to support that, as well as banking relationship. So if you're a startup, maybe funding, for example, is way more of a priority than cash necessarily. And so you'll need a treasurer who is more inclined and has experience around raising funds, whether it's PE or banks, versus maybe an organization that's a little bit more mature and growing really quickly. Your working capital demand is going to be much larger, so you need that kind of experience as well, again, as the systems that support that. And that goes all the way through from your ERP to your controllership and consolidation systems, and that comes with maturity, right? But I think the advice I would definitely give to anyone who's not sure is start with the end in mind. Define what that goal is that you need to achieve, or the problem that you need to solve for when it comes to treasury management, and then identify kind of the resources that you need to solve it.